All right, what is up, everybody? Hope you guys are staying safe out there. As always, welcome back to the Revan Trading channel. We are looking at the Bitcoin market and want to go over some strategies and some new upcoming tools, as well as just look at the market on a few different time frames and see where we could be headed. We are seeing some major downsides still, continuation from the last few videos. It has been quite a while since I posted. I've been pretty under the weather and sick and in bed for at least a week now, so not fun, but starting to feel a bit better. I'm still pretty congested. You could probably hear it a bit, but enough of that. Let's jump into the market. So the one-day time frame, currently we are looking at a cross to the downside. We've seen the cross initiate at about 101 again, and it's been briefly crossing to the upside, but basically turning around on small moves to the upside. You can see this last rejection. I wish I had made a video here. I started to make a video, but just couldn't get through it. I was too sick. But a few days ago, I was making a video when price was just touching this midline, and it did reject off that midline. So it's pretty common if it rejects off the midline to see a return to the dotted midline of our support bands right here. And we did see that, especially if you have downward bias on other time frames, higher term time frames. So yeah, this is playing out. So anyone that has the ribbons tool, this is just such a great tool for bias of general direction. It has a few new additions. I've added these arrows that generally show bounce, very, very short-term bounce, possible pivot zones, and then these lines, the pivot lines, which I have had on there for a while, that show general bias. And so we have seen over here when the pivot line is initiated, so you have a wick down, you have your long-term target initiated right here, and it took a while. We did see a little wick off of it and then a fulfillment of that target, and then we saw another target formed over here, and again we just saw the fulfillment of that target recently. So these targets are showing pretty useful, but we can see to the upside the targets were actually invalidated. So to counterpoint, sometimes these targets are initiated and then not fulfilled. Obviously, when price changes direction, it generally will have less of a chance of fulfilling these targets. So we did have two upside targets that didn't get fulfilled, but we did have our arrows call a top. We can see these are a little bit more extreme up here. Those called the top, and we've have seen just downward side since then, downside since then. A lot of times when you see, for those users who do have this indicator, when you see these arrows, you can generally count on a bounce soon to come. Now, oftentimes, especially if you see two in a row, that's generally much higher probability of a bounce. So the second one, you can see here, the second one, we had a nice bounce up. Over here, the second one, we had a nice bounce up to the midline. We did see our first one, so I'm waiting for a second one to initiate over here, and then that will probably be a highly likely bounce point. We do have our short-term target showing a bit of upside. Now, the counterpoint to this, again, is if it's on weighted average, it shows a downside, but it doesn't. Weighted average doesn't actually have enough historical information to show a highly probable target. So this is the most highly probable target as of now. It does say 86% that we see a bounce up to 95. So I do see that is a likely bounce sometime soon to happen. But we do have a little bit more downside possibly to go here on our RMO. We'll see. We'll see if this gets initiated. We have seen, again, already a pretty nice move since it already turned to the downside. But it does say 89K could be if we do see a bounce, it could be right here at the bottom. So I wouldn't be surprised if we saw a wick or a little bit more downside price action briefly, and then a bounce up to 95. It might bounce up to 102 or even a little bit higher. We'll look at a few other time frames in just a second, but we do see that it needs to close above 98 to get upward momentum as of now. If it was to close, probably in a couple more days, that target will come down a bit more. So we'll see. But on the daily time frame, we do have a little bit of a downward bias with a bounce soon to come. I want to look at the 10-day time frame here real quick. Here we go, because we've been watching this. So we did see that, I thought it would have a likely bounce off of this dotted midline. We actually saw a, small wick bounce up to 106 area, but it rejected and it went down and closed below here. And the RMO on the 10-day time frame is showing possibly down to 81K. So if you're being a little bit more on the bearish side, We might see down to 81K. However, we are seeing the oscillator hit its target. The oscillator level said likely down to 25, and we are just here at 25.32. So that's basically been fulfilled. Our duration is 1 bar over, and our separation is 4.9 points over. So we are seeing a bit of extremes on all fronts except for our price move. So, this kind of score over here, the combined score, kind of shows historical, where we are historically with the combined score of these. And again, so we are seeing, in the 62 percentile, it's not up to the 80s yet, 70s or 80s yet, but it is over 50%, over the 50 percentile of moves. So yeah, I do expect at some point again to see a bit of a bounce. This target, short-term target on the Rev and Ribbons is showing like 90K. So again, 89, 90K, possibly worst case scenario 81, but I don't necessarily expect that to get hit on this move currently to the downside before a bounce. I do want to look at the 1 month time frame though before we go on from here, because we can see on the 1 month time frame we are hitting our support 1 band. And this will be very interesting to see if we come down, because the monthly time frame is showing we could come down to 81K, which again, a kind of confluence with the 10-day time frame. 81K area to see a very, very likely super strong bounce off of that area. So my general thought on the market is possibly a bounce from here up to 102K area, maybe even up to this midline, which is actually just at 102K. So even more confluence there. I do think likely to see a bounce to 102K area in the near future, and then see possible more downside to 81K, maybe a bit of more of a bounce from there. And then if we are in a bear market, we should see this price move fulfilled to 60K. Now, I'm not personally necessarily of the mindset that we are in a bear market yet. Maybe I should be, just based on the monthly momentum oscillator. We did see our bear markets always come in on the cross to the downside. And we saw, in way back in 2018, our cross to the downside, there was a long period of bear market. And then our 2021, we saw the cross to the downside happen. Now, it did happen before it bounced up, but it bounced up and rejected off of that midline. And we saw something kind of similar here where, except for this one, made higher highs. This one almost crossed down, had a bit of a bounce, and then we saw it actually cross to the downside. So once it crossed to the downside, the bear market is likely soon to come. Now, if we do see something very similar to what happened in 2021, we might see a very strong bounce off of this support 1. So right now, again, we're off of the support 1. This one actually back in 2021 went all the way up to the dotted resistance midline. So over time that slowly came down. Actually, that let's see, from when it touched the midline, it actually went up a bit. It went up about 12%. So I guess that could be a counterpoint to see a bit more to come. If we went up another 12% from here, that would be in the 152K area. So maybe we see a bounce up to even higher than I was thinking. This is kind of a another scenario on the if you want to see higher highs, you might see a bounce up to 152K area, and then our bear market really initiated. That would be a little bit more of a my most bullish side would say, hey, we see one more bounce up a little bit higher. We reject off of this dotted resistance line again, and then we really see our bear market go on from there. But who knows? Time will tell. For now, currently, I'm just looking at 102K area, and I have had a few buys in between 98 and 89K. A few of those obviously have gotten hit. They have not gotten hit in the high 80s yet, and I will be selling a lot of those at the 102K bounce if and when we see that. I do expect that bounce to happen at some point. I don't think we're just going to go straight down from here. We have seen a nice candle to the downside. The monthly candle is 16% to the downside, and our last girthy monthly candle was a 16%. And we did see a tiny bit more before a bounce there, but again, just looking at general downside from what we've seen in the past, this does seem like a really good area for some kind of bounce fairly soon. So those are my general thoughts, kind of throwing a bunch of ideas around here to chew on, just kind of, doing some basic analysis here of the markets. Let's look at a few strategies I've been working on because we are coming into a bit more of a possibly bearish period of the market. I've been working on some short strategies. I've actually been working on one for the ribbon momentum oscillator. So it's just built on the ribbon momentum oscillator, the ribbon width percentile, and currently using the BBWP to get a little bit more profit out of it, squeeze a little bit more profit. Now you can see it's sideways a lot of the time, and you generally only see upside during periods of a little bit more bearishness. So you can see here in the upside started around April, May of 2021 and ended in June of 2023. Then we saw a lot of sideways. Now the upside to this is the drawdown is pretty low unless you're in real extreme bull markets. So we did see a nice big drawdown over here when we were seeing our massive run up, but we didn't see nearly as bad of a drawdown recently in our recent bull market. And in fact, it's been making some decent gains even over the last few months. So this will be released soon. If you have the Revin Ribbons suite, you will have access to this. I'm going to actually work on it a bit more. And again, this is on a 2 hour, so it's a pretty low time frame to be doing shorts. But it has been getting some nice shorts here recently. I'm doing a few others on the higher term time frames. This is actually a long. And these are two indicators that I have been working on in the background just to release over the holidays. So look for those. More information to come on those soon. And they do make some really, really nice daily strategies. We have seen a nice, massive 1,000% gain since 2016. Now, 2016 was about 10 years ago. So, over the last couple years, we can look at that real fast. I'll just go ahead and change the settings here. So let's look at since 2024 and see what our gains have been. Now it has been, just 43% since 2024, but it's not so bad when you look at if you're trading perpetuals. Our drawdown is really, really nice, so you can leverage this up a decent amount. So say you put it at, let's say we put it at 3x leverage. Our drawdown will go up to, a nice 28% on 3x leverage, which is nothing to, I guess it only goes up to 19. That's actually interesting. So at 3x leverage, it keeps up with Bitcoin. Its drawdown is actually better than Bitcoin, has been over the past year. And you can see even recently here, it missed this major downside. So this indicator will be very, very different than any other indicators I've built. Take advantage of the markets in different ways. And you can see this indicator actually doesn't win a lot of trades, or at least it could get out of a lot of trades at more profit than it does. So this could even be optimized a bit more. And then I have a short strategy on the daily time frame built for this, and this strategy is also just an incredible drawdown right here. It's only 8%, so you could put that at let's even put that at 4x leverage. And commissions, you could put the commissions even a little bit lower because these are using limit entries and exits. Almost every exit on this is going to be a limit exit, and I'll show you why in a minute. But even at 4x leverage, we see, the max drawdown is 25%, which is nothing to, bat an eye at. However, the total P&L since 2015 is just massive. And for a short strategy, has a great profit factor. The trade-off is the profitable trades. It only wins, 3 out of every 10 trades. So there are lots of losses. However, your losses are super, super limited. I'm just going to show you down here. The losses are going to have a very, very small max stop loss. So it's 0.85% a limit stop loss. So again, many exits will be limit losses or stop losses that are put in immediately as soon as the trade triggers. So you could do a limit entry and a limit exit and get really, really great fees on your exchange here, and especially because it's on a daily time frame. And you will see a lot of trades obviously lose because it has such a small room for error. However, the trades that it wins are much bigger. So that is something that, again, is coming. It has these two new indicators that I've been building. So those will be available here this month. And I'm going to have a pretty massive sale across all of the indicators for the holidays. So be watching out for that if you are looking to have short and long strategies available to you and some more indicators. All of this good stuff is coming soon. All right, I want to quickly look at a few strategies that have been actually working out and doing well, because we do have a few strategies, a decent amount of strategies that have been taking some major losses. I'm sure users have felt some pain over the last few months, as most bulls have, as the market has been, just kind of crushing at the spirits. But I did post this Max Plus indicator recently, and anyone that is in the gold tier and above for the bumper bands has access to this Max Plus indicator for the 1 hour time frame. I think it's the best tool so far, and it has been proving itself. We will look at that. I'm going to pull that up. I'm going to also pull up our 30-minute strategy. Let's pull up I believe the one that's been doing pretty decently well is the version 2 here on the Discord. That's been holding its own. And then we're also going to look at the 1 hour max, the regular one, which is right here. So we're going to look at these three. I'm going to put them on 3x leverage, and then we are going to compare it to what has been happening in the market. Okay, so this is already set. It's set at it's set at 3x leverage, and it's set to only show the results since 2025. So you can see about three times the amount of order size as we'd have initial capital. Commissions are quite large at 0.6%, so very reasonable commissions. And then we have our dates set to 2025, January 1 to current period. Okay, so this is what we are looking at. Now we have seen a pretty nasty downside. You can see that our drawdown is 41%, just gnarly since the top. And I'm actually going to look, it was it's actually even more than that if you look at the cumulative profit. So if you started trading this at the worst period and went until the worst period, if you went from high to low here, that looks like it's actually about a 100% drawdown in an account. Again, this is at 3x leverage, but that's really, really nasty. But again, over the year, at the peak, it was up 150%. So, 154%, which all adds up, right? So if we went up about 150% and then we went down, about 100 of that, we are at just about 57%. So this is just a super important leverage. This is a super important lesson on leverage. Even at 3x leverage, this account is down massively, and it's down more than that drawdown shows. And if you want to be even more precise, you can put your date to the worst date as a start date, and then just look at the actual equity curve. It's very nasty, not fun to be trading. Again, if you're trading at leverage, that's just going to be part of it. But we did see that the account is actually up much more than Bitcoin. So Bitcoin since January 1 is down -1%, and the account is actually up 57%. So if you can endure and make wise choices, trade at low leverage, have extra in your account, make sure that your account can keep trading. This strategy actually, because it went sideways from January to March 10th, you can see March 10th here is just about at zero. And since March 10th, it went on a pretty great spree from March until June, about July actually. March till July 14th, with just a very, very nice run up. But all of the gains happened over that 3-month period. Then we saw a bunch more sideways, and then recently some downside. So this is, again, I've made a video. If you haven't seen it, go back and watch it on strategies, on how to endure drawdowns, how to think about trading them. Nothing is financial advice, but this is more just thoughts on how I do it and how I get through major downside periods. Because if you're going to be trading, you never know when a bull market's coming, you never know when a bear market's coming. So you have to always be prepared and ready for that. So this strategy, again, since the beginning of the year, up 57%. However, most of that was done in a 3 or 4 month range. And if you started trading, unfortunately, since even, it looks like, where would it have been? May. If you started trading in May, you're probably at break even. If you started trading after May, like after the 4th of May, you're probably your account is probably in the red of this, which is just nasty. It's not fun. However, Bitcoin as a whole is also in the red since then. So as a holder, your trading account at leverage, so you're expecting something like that. Okay, so that's a quick overview of the max. The regular max. This is the max plus. So this has done quite a bit better. You can't see at 3x leverage. The drawdown is only about 20%, which I'm sure it's a little bit more if you do the actual math here, which I showed you how to do it on the last time. Might be a bit worse drawdown, but still way, way, way better than the last one. Total account is up 87%, and it was actually February was the low. So it went sideways from January 1 to February 2nd. And since then had a nice slow and steady grind to the upside, some sideways period, another grind to the upside, some sideways period. And now is seeing some pullbacks since about October 27th. All right, so October 27th till now, again, seen some pullbacks. However, this indicator has been handling the market much better. And again, 87% as opposed to, negative 1% if you're holding Bitcoin since January. In my opinion, that is a win. To each their own, but this is this is kind of how I think about trading. I put it at the leverage. I'm thinking about trading it. I compare it to the buy and hold of it and look at the drawdown. All of those things are very, very important to know and understand. And then from there, you just kind of let your strategy do its thing. And if it starts going bad, you also have to be willing to take a loss, like any trading scenario. Okay, so this is the Max Plus, again, available for users. This is the 30-minute AI Max. This one is also up a nice 83% since January 1. This strategy is up 81%, but again, like I was saying, sideways for a long period till February 27th. Then you saw a massive set of wins till about May 26th, even into July 11th, saw, a little bit higher highs, and then has really been, slowly down and to the right since then. And Bitcoin itself has also been slowly down to the right. So the strategy is, again, at 3x leverage, it's outperforming Bitcoin. It is having some major drawdowns that you have to be aware of. But if you can withstand and wait for those major winning periods, the strategy is still a winner. So for those users who have been trading strategies like this, hang on, make wise decisions. If your strategy does not seem to be treating you well, I'm not your financial advisor. Don't take this as advice, but if it was me, I might take a bit of a break, get my head in a good space, maybe trade less capital. It is up to you, but there's lots of ways to make sure that you are keeping yourself in a good headspace, and that is the most important part of trading. Again, there's a video. I'll put a link in the description below to a video on that. So we've looked at everything I wanted to look at in this video. Thanks for hanging in there. Again, please stay safe in the markets out there. Lots of new great things coming, and I will look forward to seeing you guys in the next video.